Before I get to my guest, Professor Ken Rogoff, former IMF chief economist and, of course, current Harvard University professor, I would like to point out the dollar index has been on a tear the last 20 minutes. 30-year bonds are 2 basis points into positive territory. They settle at 128. They're now at the high yield low price at 130. We're a whisker away from the 80. We just hit 80 and 10s. They're unchanged. So the long end is unchanged. Short end is getting their curve steepening. Professor Ken Rogoff, there seems to have been a very tight correlation. As rates dropped, so did stocks, and so did confidence in the economies, domestic and global. We are seeing a bit of a reversal to that. You want to weigh in on this subtle change as we get ready for 24 billion 10s to be auctioned in about an hour and 10 minutes?
Well, I mean, I think it's heightened uncertainty is driving down both the interest rates and the stock market. And, other times when the interest rates go down, sometimes the stock market goes up. So this is an extraordinary circumstance. The market is feeling incredible uncertainty. Yeah, even if we hadn't changed the mean of expectation of where the economy was going, with this kind of volatility, we would see a sharp drop in stocks just with that.
Now, we saw, of course, Mr. Carney and the Bank of England and the UK government come up with a package that was kind of all wrapped up, communicated, expressed very well, and it seems as though the UK market, at least for a while, like that. There's hints that the EU 27 meeting yesterday will lead to the same arrangement with the ECB and Lagarde tomorrow. Can you weigh in on central banks and governments and fiscal and monetary getting together a little bit here?
Well, in the first instance, we need a multifaceted response to the health crisis and what's happening to the companies immediately hit by that. And there's disagreement about what that would be. Italy and Israel, China have taken these extreme measures. Maybe the United States will go more to social distancing. But beyond that, you want to prevent this from lasting a long time. I would certainly be in favor of an outsized fiscal response now and perhaps more later to protect the healthy part of the economy. Yes, this is a natural disaster. Yes, this will eventually go away. But this is not feeling like an every 3-year event. It's feeling like a much more rare thing happening. And you want to watch the collateral damage. You want to have a V-shaped recovery. So yes, countries need to get together, but they certainly disagree right now even on what to do. Germany is preparing its people to say you're all going to get it, and we're going to let that happen. Italy's trying to sort of not have that happen, and Israel even more so. What do you do?
You and, of course, Carmen Reinhart wrote a very famous book. This time it's different, 8 Centuries of Financial Folly. I keep thinking of that book, and on the other hand, I keep leaning back thinking central banks still have a hangover for some of the policies they implemented during the credit crisis. Putting those two notions together, do you think central banks can rise to the occasion? And is there ammunition, true ammunition? I know that with regard to the U.S., Treasury Secretary Mnuchin said he would like to insulate taxpayers and have more loan guarantees than bailouts. I think you see where I'm going with all this. Weigh in on how governments and central banks can or should move at this point.
Look, there's a lot of stuff that can be done on the fiscal side, and when we're talking about loan guarantees for the airlines, that really ought to come out of the Treasury. That's fiscal policy. The technocrats in the central bank maybe implement some of it, but they shouldn't be deciding it. We may see some creative central bank policies, but we've talked about this before. I think if things got really bad, we would wish that we could use negative interest rate policy effectively. It's not there. Although if you look at markets, they think there's some chance we'll see a bit of it even in the United States. But the first line of defense here is fiscal policy, because you have to address the problem. There's a health crisis. Airlines are, going to need loans, small businesses. And I think this has to come out of fiscal policy, the Treasury. And I think we need a significant stimulus beyond that, because the healthy part of the economy could suffer. And that would really be a shame, because I think this will pass and we ought to get a good recovery when it does. But if policy is paralyzed, that's at risk.